Wednesday, March 13th, Finance Committee meeting to order at 7:48 p.m. with myself, Brian McGinnis, as chair, and my colleague, Nicole Shimoni. Are there any comments, suggestions, petitions by residents in attendance regarding items not on the agenda? Seeing none, let's move to the discussion items. Discussion item A, this is the pension plan investment policy. Yes, if you come up, Tom, thank you. I can give a hard copy.
So Brian, should I continue? Is that how you want me to work it, or do you have comments you want to make, or?
Yeah, I'll just be brief here. So this is for the public and those watching at home. Basically, we are reviewing the investment policy moving forward, the objectives of the policy, and I'll let you go forward with that. And right now, as you can see, we have the information regarding the pension funds.
Okay, so I'll stay on the investment policy even though it's not up there. Okay, right now. So the investment policy was put together when we were brought on board a little over a year ago. Okay, and it talks about an allocation of 65% stocks, 35% fixed income. And within the policy, we talk about having an ongoing discussion about improving return and reducing expenses. All right. In addition to that, we identify the three major categories of U.S. stocks within the investment policy, international stocks, and fixed income. And we have a bucket that's called alternatives in case an alternative investment might be considered. It's not considered today. And upon further review of the investment policy, we're going to elaborate a little bit more on what the alternatives bucket might be, so it's more present on a move forward basis. And with that, we will review that and bring it to the investment committee's attention next time we meet. So those are the comments I'd like to make with regard to the investment policy. Okay. Now, the one paragraph talking about, in the investment policy, talking about an ongoing review of costs to the fund. So when we came on board about a year and a half ago or so, we took a look at what were the expenses that the borough was facing with regards to the previous provider. And those would be in for both groups, it would be three categories. How much is the investment advisor charging for oversight? What are the costs of the various investments within your plans? And then how much it costs to custody the assets and provide payroll for the retirees, et cetera, et cetera. Cut those checks, get them sent out. Okay. And again, as you can see at the footnote at the bottom, we called Sean's office. Maybe Barbara provided that information. I don't know. But going back to 21, which was the last full calendar year, we saw it was about $483,000 from the previous provider. So we were brought on board, and I think the mandate from the investment committee at that time was also to take a hard look at costs and see if there can be any savings from this portion of the services provided to the borough. And you can see the fees that we're charging is a fixed rate of $70,000, which compares favorably to the previous provider. The cost of the funds that we put forth currently, about $210,000, compares favorably to the previous provider. And then part of the RFP process when we presented was such that if you were to select RBC, that the custody would be part of the overall package with us, and we would search for and provide an external payroll provider, and that payroll provider is charging 70. And there was a couple of bumps in the first couple of months, but that all got ironed out. I don't believe, Michael, we've gotten any phone calls since the first 2 months. So you can see the total cost with us being on board versus the previous provider, about $288,000. So you can see and these are annual fee savings to the borough of about $195,000. So in terms of the items that are specified in the investment policy, we think we at least did that right up front for you. Okay, next page, please. Okay, part of the issue of costs in the world of investment when you're selecting a fund is the choice between an active manager. You have a lot of people, you're doing a lot of research, you're making a lot of decisions, versus an index, which looks at the structure of the particular portion of the either the fixed income or the equity market that you're investing in. And that structure is highly systemized, computerized to get the lowest cost possible. So there's always the ongoing battle between the two. When we came on board, one of the things that we firmly believe in terms of large cap space would be, let's index that, because it's very, very difficult. And I think it's most apparent in the most recent year when in 2023, when 7 stocks basically led the return of the S&P 500. If you're an active S&P 500 manager, you have to make this decision. Do I want to buy this stock that's been roaring up that it might plunge tomorrow, or do I stay away from it? That's a very, very, very difficult decision to make. The index doesn't make that decision. It just lets it ride. So what you saw was the index is a good choice in terms of the large cap space there. Now, when we came on board and we pitched to the investment committee, we thought there were areas of the market that were inefficient, and perhaps you can get a higher return. Were the other 3 areas: dedicated small cap equity managers, international equity managers, and fixed income managers. Next page, please. So you can see, if you look at the line item for the small cap manager, and we tend to look out 5 and 10 years. And if you compare the manager, which is the top line, versus the index, which is the bottom line, you can see that manager does outperform. So check on small cap. Next page, please. If you look at the individual calendar years, also, you can see how do the managers perform. And one of the things that strongly desired with an active manager is, when the markets go negative, will I go down less? And you can see in 2022, that was the case. So that's another positive check. They went down 16%, which isn't necessarily good, but the market went down about 20%. Now, offsetting that is a lagging performance in 2023 when the markets rallied. Okay, so that's like the give and take that one needs to have with an active manager here. Next page, please. International managers, there's 2 in the portfolio right now. They're both active, so they charge the higher fees. You can see the 5-year and the 10-year numbers also above the benchmark. And if we can skip ahead 2 pages, please, to page 7. If we can look at the fixed income managers, if we look at the page 7, please. There you go. Thank you. The page number on the sheet, maybe not the PDF page. Yeah. So you can see we tend to look long-term, 5 years. 5 years up 2%, which isn't a lot of money, but you can see the index is up 1.1%. And then likewise, 10 years, decent outperformance. So in terms of coming on board, when we first came into the plan about a year and a half ago, so far it looks everything like checks. Page 9. And again, we did it. This is a very, very, very strong what if. If you would just index and not had the active managers, and we had similar performance for the next 10 years that we had for the last 10 years, you can see there is an additional savings or interest income, let's call it, or gain to the plan, which obviously is beneficial. But nonetheless, turn to page 10. We remain focused on delivering a low-cost investment solution to Westchester Borough for both the police and the non-uniform planned. We've already delivered significant cost savings, and we've come up with some ideas that might be able to deliver additional cost savings. And with that, we will be discussing with the investment committee in future meetings. Okay, so we think we've done a good job for you so far in everything we've done. But once again, like the investment policy states, this is something we're always looking to do. And we'll be revisiting that issue with the investment committee in future meetings. So with that, I'll end my review, see if there's any comments or questions.
Any comments or questions on the dais here? Okay. Again, thank you for that presentation. And moving forward, would you be willing to put some other portfolios together that show a little bit more indexing that could lead to cost savings over time. Maybe come back next month with some different diagrams, and we could look at that together.
Sure.
Perfect. Thank you very much. Appreciate it. Thank you,
All right,
guys.
thanks.
Any public comment? Oh, go ahead.
Thanks. So, yeah, thank you. My name's Eric Wilkins. I'm actually on this pension committee. This committee was born out of a lot of hard work during what was a pretty stressful time for the borough, and it was trying to figure out how to cut costs for everything anywhere it could. And it was then Mayor Herron who conspired with my wife to stick me in this financial advisory committee. I know Nicole knows that pretty well, where it was because I said, hey, look, I think you're spending way too much money on the pension. And Mayor Herron said, well, great, you can help us reduce that. And I said, terrific. And so signed up for the financial advisory committee, worked with, at the time, it was Bernie and Mike Prone and Nick and Bill Scott. And so the whole idea of this committee was, how do we take cost out? Which we spent a lot of time, Barbara was there as well. How do we take cost out of just managing it? But also it was, how do we get better return? Because we were in a one size fits all, you can have any color Model T you want as long as it's black. We were stuck in with everybody else with a portfolio that was just basically market portfolio. And so when we decided, hey, this committee, we should find somebody who can build a customized portfolio for us and could identify mispricings in the market and take advantage and be tactical and generate alpha, generate excess return above, market rates. And so that was the purpose. I think Bruce went through some of the numbers in terms of what we saved just by moving to the consultant that we have, which was terrific. But when we look back over the past year, we've had 30 basis points of outperformance just with that lineup. At 30 basis points of outperformance, that's $200,000 worth of excess return we've been able to generate with the lineup, and with I think that has 40% already of passive. So just the 60% we have in active has generated that pretty attractive outsized return. And I think with who we are as a borough and what we have, this $50 million plan really affords us the opportunity to act like an institutional investor that we are, right? And the committee with the resources of the other practitioners in the area, I myself, all I do is work with pension plans, $50 million to $2 billion. Those are our clients. We see their asset allocation. Our asset allocation doesn't really differ very much from all of our clients and then all of the consultants and administrators that we work with. I think the benefit of having this $50 million plan, excess of $50 million allows us to build interesting portfolios that can outperform, have us build customized portfolios, take calculated risk, generate excess return. So I think that's something that we have that maybe a $10 million or a $15 million pension plan like West Whiteland, all they can really do is put it into index funds or mutual funds and corporate bonds, and they generate a market return, and that's what it is. But rest assured, yeah, look, we're looking for the best possible return we can at the lowest possible cost, but we're also looking to take advantage of the resources that we have. I mean, we meet very regularly in an effort to find excess return, and the excess return that we were able to generate is monies that you all had to spend elsewhere. I would leave it at that in terms of why we did this, what we're doing, how we operate. We meet with an eye on evaluating performance and looking for the most interesting, low cost, positive returns we possibly can get. So, yeah, we appreciate, the council making this opportunity available to us as volunteers, because we like, everybody on council everybody on the pension board really enjoys our meetings that we have, and we'd love for folks to come and join us in the meetings where we talk about different things and evaluate management. We do it very systematically, like any of the other pension clients that I work with anywhere in the country. So thanks for your time. Really appreciate the support.
Thank you.
Yeah.
Appreciate it. Thank you, gentlemen, and I look forward to that information at the next meeting and send it over. Thank you.
Yeah, I will also say though, thank you for saving us all that money.
But with that, you guys know we could save a little bit more. We could save a little bit more out there.
Keep digging.
Thank you, gentlemen. Have a great night. Barb, let's move to item B, the February 2024 financials.
Good evening. If we could start with page 2, please. So looking at the February 2024 cash balances report, we started the month with $19,573,906 in cash. We brought in $1,463,515. We spent or transferred between funds $585,304. This left us with an ending cash balance of $20,452,117. Of that amount, $18,951,830 is for restricted purposes. Looking at the financial highlights for the month of February, all line items should be at or around 82%. There is one line item in particular that I wanted to point out. It's within the Public Works Department, line item number 01-43613, insurance damages. This line item is currently $98,715 over budget. Within this line item, we account for all invoices for various accident repairs to both vehicles and equipment. And we have an invoice that was booked to this line item for $82,000 for signal service. This is for a traffic light that was, there was an accident on August 3rd, and we have to pay them for that work. We are working to get reimbursed for that. The expenses in this line item are typically offset by the revenue that we have above in line item 01-38013, which is insurance damages. So other than that big line item being overspent, all other departments are working within the 82% expectations at this point in time. On the revenue side, both sewer and EIT are coming in slightly higher than that 82%, which is a good thing. The other big thing is our tax bills did go out at the end of February, which is a good thing in our department. It brings in cash flow and helps, run things more smoother. And we don't have to say no to these big capital projects that are coming upon us. The process has gone relatively well, in my opinion. We did have a small hiccup with the online payment platform. When residents or owners went on to Muni Billing to make payments, they weren't able to enter their last name. It wouldn't come up for them. And that was because of the way that the information that we received from the county, the way that it was imported. But the team worked really well together, and we were able to get that rectified. So that has since gone away, which is a good thing as well. We haven't heard too many complaints. People are coming in, we're getting the payments in the mail, they're coming into the window. We have received a few small complaints about, the credit card fees, but, that is a payment processing thing. It is, an offering that we have out there for a convenience. And obviously that does come with a price tag that the property owner does have to pay. We are working with the mortgage companies that service a lot of the properties so that we are able to provide an electronic file for them so that we can send that to them, and then the payments will come to us, and then it'll be a lot easier on our department for entering them into the system. One thing I did want to mention, because it is one of the purchasing order approvals on the agenda later, in our liquid fuels fund, we do have $60,000 in cash which should be sufficient barring any major weather updates or any invoices that I'm not aware of, because we do get an annual allocation and we will receive that next month. Other than that, those are the big highlights that I have. So if you have any questions.
What's the biggest headwind moving forward? Would that be probably the real estate taxes as far as the transfer tax, would you say?
The transfer taxes, that seems to be kind of more in expectation this year because we did lower it. We had a high number in the budget last year and we did lower that just based on what we were seeing coming through and not as many property sales coming through with the high interest rates. So at this point in time, I do see that doing better than it did last year.
Thank you. Any questions, Nicole?
No, I'm good. Thank you.
Any public comment? All right, thank you. Let's look at the next discussion item. This would be a request for professional services for health insurance.
Yeah, myself and the Director of Human Resources, John Krauser, had an opportunity to put together a memo dated March 8, which provides to the committee a census of the number of people who are in our health plan, covered by our health plan, including dependents. The bottom line number is 278 persons at a cost of $206,000 roughly per month, or about $2.5 million per year. So that is a little more, right, Barb, than 10% of our general fund expenditures going to health insurance. So this is a big deal. And we provided to the committee a sheet of summary plan benefits, so you get an idea of how the plan works. It's a high deductible plan, which means the employee's on the hook for the first $4,000 of costs, and then after $4,000, the plan covers 100% of incurred costs, negotiated rates for pharmacy services, whatever the individual needs. The borough supplements that high deductible plan with a contribution to a health savings account every year, and employees can elect to further fund their health savings account up to statutory limits with pre-tax payroll deductions. So right now the borough is contributing $3,000 for persons on family and $1,500 for persons who have single coverage. So it's possible with an extra $100 per paycheck to fully fund your HSA and essentially not have any out-of-pocket costs per year. The borough is insured through United Healthcare health system, and it's supplied by a healthcare cooperative. I don't know how long we've been a member of PIMIC. Don't ask me to tell you what PIMIC stands for because I never get it right. But there's about 280 municipal clients in Pennsylvania who are members of that. Another competitor in that market space is Delaware Valley Investment Trust, which is based in Montgomery County. A lot of municipalities in Southeast PA work with that organization as well in a self-insured model. And then there's the marketplace. We could go out to the marketplace just like any other group of 278 individuals and purchase group insurance. We currently work with a benefits provider as an interface between United Healthcare, PIMIC, and the borough, and that provider is Benecon. So we have a third party interfacing between us and the services. That has its advantages at times. So I just wanted to start off with that, where we're at currently with our health benefits, and pose a few questions to the committee to consider before we take this out to market. And I also proposed a timeline to get this done, because I think this is not like an RFP for road salt. We're not going to put it out there on pen bid and get 10 bids by the due date. Probably going to have to target market this, finesse this, and do a one-on-one, figure out providers, maybe as a baseline, go through the front door of healthcare.gov and just find what it would cost us to purchase a large group plan, and then go through, maybe as a comparable, talk to Divot and identify some other potential benefits providers that can help us go to market. There is a potential for savings because And I believe those potential for savings would come from the unique demographics of our group. What I mean by that is right now in the marketplace, you can only discriminate according to age and smoker status for costs of health plan. So if we were a older group and we were all smokers, I don't think the smoking matters. An older group of non-smokers, we might do better going out to a larger marketplace than to be in our group setting where we are responsible for our own claims. We'll have to look hard at experience to make that determination. We won't know for sure until we go out to market with all of this information. But I think there's some work that has to be done to tee this up to get it launched. And it's going to take us about 90 days to go from authorization to get this thing launched out in the wild and get proposals back. And then I think once we get proposals back, that's a simple process of evaluating because we'll have declared the form they have to come in. We'll ask them to be done in a comparable way that we can just look at it real quickly and evaluate. One thing I'll say that we do really well here in the borough, and because I've worked in other places where this isn't true, all of the employees are on the same health plan here. And it's a very good health plan. So I think that we shouldn't discount that aspect of what we do for our employees. I think that's really good because if it were different, you'd set up, well, these employees are getting this, but we're not getting that. And I think because we're all on the same healthcare plan, that fights that tendency and creates some unity in the workplace. So I just post some questions. I'm interested in your feedback. I'm interested in discussion to the length that you can at 8:15 on a Wednesday night to think about this. Maybe give us some feedback now or by email of what direction you want to go in and whether you want to take this to all of council.
Ms. Shimona, do you have any questions regarding the presentation?
No, no questions. I guess I guess I do have a question. So if you did take this, if you did do the RFP, like, I mean, how many reasonably other plan providers do you think that you, in the 90 days, if you're saying it takes about 90 days to look at, to research what's equivalent and what have you, and then go put out the ask and get some information back? I mean, what are you thinking? Like a couple of them, like 2 or 3? Is that like, what's a reasonable amount, you know, that you would be thinking that you could fit into that 90 days?
Well, we have to figure out how to do this. So I'm not sure how to answer that question. I would hope 2 or 3 would be the minimum that we could come back.
Say that again.
Hoping 2 or 3 could be the minimum number of proposals that we could come back with.
Any further
That's
questions?
good so far. Yeah.
I mean, I just want to make a statement. As I spoke with you and Barb about this, I mean, this is something we've never done. I do think it could lead to the potential for cost savings. At the same time, I want to make sure that we still have high quality health insurance for the borough employees, for all employees. And I don't think we have anything really to lose to see what's out there and what the market can dictate. And if there's a better plan that's going to offer cost savings, then it's going to be time to make that change. So again, it's different from an RFP that we put out there for paving or anything else, right? There's a lot of moving parts here. So in 90 days, 3 months from now, so I guess we could probably expect an RFP sometime in June, July, roughly.
You want to move this idea forward to council for next week? We could have that discussion, vote on it, and then we'd have a directive from council to do this, and we could start the clock.
I feel comfortable with that. Do you? Okay. All right. Item 4, action items, purchasing approvals. $44,195.58 to Eastern Salt.
So this is an after the fact purchase. There's 4 invoices attached to this PO. This is for salt purchases from January through February. These items are being purchased through a consortium with West Bradford. It's a contract that is in place for the 2023 and 2024 year, and the rates are established through that pricing with that consortium.
Thank you. Any questions, Nicole? Any public comment? Any objection? No objection. We could move forward with that purchase. Number 2, $113,500 to CAP Associates.
So this is for the purchase of a blower for the Goose Creek plant. This vendor is a CoStars member. And this is an absolute emergency for the plant. They've been running at emergency status, so, and it is within the capital budget for this year.
Thank you. Any questions? Any public comment? Any objections? All right, we can move forward with item 2. Let's look at action item B, motion to approve the February 2024 minutes. Any comments? Any public comments? Any objections? We can move forward with that approval. Item 5, other business. Any other business? Seeing none.
Oh, was that the minutes?
Yes.
Sorry, that was.
Any business? All right, seeing none. Meeting adjourned, 8:19